What if you could invest your money into Bitcoin mining hardware that will earn you Bitcoin instead of paying taxes legally? Well, you might be able to. Welcome back to the Enlighten Mining channel where we talk Bitcoin and Bitcoin mining. And I'm super excited to be joined by my friend and CPA Jordan J Money Guess. Welcome to the show.
Thank you, Colby. I'm excited to be here and excited to chat with you.
A lot of Bitcoin miners are absolutely charged up about accelerated depreciation being back with the big, beautiful bill. So I thought I would have you on the show to discuss how this is a game changer for people that are already mining and adding more hardware to their fleet, but also people that may not have considered this as a potential tax strategy. Super excited to jump into it. Real quick introduction. Jordan and I connected a couple years ago on Bitcoin Twitter, funny enough. And Jordan is building a company called Bitmint, which is super useful for individual Bitcoiners and businesses that deal in Bitcoin, making accounting easy. Also, you mentioned Satoshi Pacioli. I'm interested in hearing a little bit more about that. So, Jordan, tell us a little bit about what you got going on at Bitmint before we jump into some questions about tax strategies and how people can potentially limit their tax liability by acquiring Bitcoin mining hardware. And before we get to the questions and the juicy stuff, guys, I do have to say this is not financial advice, right? Um,
Right.
this is
Not
for
tax advice.
correct. Even though Jordan's a CPA, he is not providing you tax advice on this video. This is for entertainment purposes. It's general. So, guys, always, of course, seek out your own individual financial, tax, and legal advice. Jordan, what do you have going on over there at Bitman? I'm super excited. I've used the product. It's a great product.
Yeah, I appreciate all of that. So, I'm a CPA, run a CPA firm, have done that for about 5 years, got into Bitcoin a little after I started my firm and went off on my own and ran into some issues kind of immediately, right? You're working with a Bitcoin mining company, you're trying to track their cost basis inside of QuickBooks. You can't really do that. Even if you do go multi-currency and have Bitcoin as one of those options, it still only goes out two decimal places. And so what you end up having to do is track a lot of things in spreadsheets. And I hear that story over and over again. I've traveled to a lot of different conferences this year, Bitcoin only conferences, to talk to people about how they're dealing with this problem of reporting Bitcoin as income and tracking it for cost basis for when they need to go either sell it or send some part of it to contractors. Along that journey, I met Joe Wood down in Nashville, who runs Satoshi Pacioli, a CPA firm that's solely focused on Bitcoin businesses and Bitcoin investors. We have spent the whole year just game planning on how we could work together in multiple different fronts. It ended up where we decided we were going to merge our firms together. We're in the process of doing that now, merging our
Wow.
teams together, bringing all of our work under one tax software subscription that's obviously different from Bitmint. I can explain what Bitmint does, but it doesn't actually do the actual income tax preparation software that every CPA firm needs. So, yeah, we're very excited about that. It's just been great to work with a lot more Bitcoiners that way because that's his whole client base. Whereas for me, my client base was maybe 10 to 15% Bitcoin related. Everyone else was more normie, small business owner kind of thing.
Right. And you just came off of the Bitcoin Financial Summit where you and Wyatt O'Rourke,
Yeah.
did I nail that?
Oh,
Of
yeah.
Basilic had a super successful Bitcoin Financial Summit up there at the Space Denver. Shout out the Space. And I heard great things about that. Looks super interesting. And of course, most CPAs, most financial advisors, number one, they don't understand Bitcoin. Number two, if you don't understand Bitcoin, how are you going to advise people on Bitcoin? Thoughts?
Yeah. I mean, I would say at this point, all of us have a fiduciary duty to our clients, be it on the tax side or on the wealth management side. And so, you talk to enough people in the space that in TradFi world, and we just kept coming across examples of folks who have not done enough research. They're not doing 40 hours a week of listening to Bitcoin podcasts like all of us are. And so we thought, well, why don't we throw an event in person and also stream it just to try to help educate the normie advisor on what is this thing that like won't go away. Their clients are continuing to ask them questions about it, especially in our world, Colby. Like there's Bitcoin and then there's everything else, and that's another kind of thing that I see out in the wild where people group everything together. They're like, oh, yes, we are interested in potentially allocating a small part of our client portfolio to crypto. And we're going to do some Bitcoin, some, I'm not even going to name the others, right? Some of these other coins. And so we wanted to make sure we took the opportunity to explain really what is the difference between the two. We didn't get too much in the weeds between proof of work and proof of stake, of course, but at least just planting that seed of they are different. And in order to see the differences, you probably need to go down a little bit of a rabbit hole, or you need to outsource this, bring in an outside consulting firm, of which there's several that I would recommend in the Bitcoin space, to either come in and educate your team over the course of several days or a week, or even bring them in and let them speak to your clients. So that's the other piece, is like we all don't do everything, right? And so find the right partners, whether it be from a service standpoint or a product standpoint, and make sure that your clients don't get rugged, right? I mean, that was one last thing I'll pause, is like making sure that these advisors get exposed to the correct partners from the get-go. Otherwise, they get into the space and maybe they're like, oh, Coinbase. Coinbase is this publicly traded company. Maybe I should send my clients over to Coinbase. Well, maybe you should consider other options for how someone can purchase and store their Bitcoin. And so we just wanted to make sure that we got all these advisors who end up speaking with tons of clients, making sure that we got them the right information.
Sounds good. And we're early, right? Few, very few. And in the world of what you do in terms of tax advising and you deal with wealth advisory, very few, right? We're early. But let's talk about mining because that's my cup of tea.
Mhm.
And let's talk about how does someone depreciate hardware. The big beautiful bill was passed on the 4th of July and it changed the game. So how does someone depreciate hardware, whether it's accelerated depreciation, section 179 or MACRS? What's up with depreciation? Is there not a one size fits all? How does it work?
So what we're seeing a lot, and I would just throw in there, depending on if you're wanting to deploy $10 million versus $10,000, things are going to look a little bit different. I'm seeing a lot of activity on the hosted mining side where, a high income individual is wanting to get exposure to Bitcoin that's more tax efficient than just purchasing it. And so they go to something like Compass and they say, I want to get involved. I want to get allocated to this asset. I'm also looking for a way to lower my tax liability at the end of the year. And you probably get in contact with someone like Colby, and Colby walks you through the process. Honestly, just takes the complexity of purchasing those rigs, getting them plugged in, managing them, just takes that off your plate, and you just get Bitcoin sent to your cold storage wallet or however you have it set up. I've been seeing an explosion of those clients being sent over to us on the tax firm side to say, hey, I got into this and now I need to understand how to track it all. To answer your question, all it comes down to, and especially in a situation like that, where maybe someone's deploying $50,000 to $100,000, we're able to utilize bonus depreciation where we can take 100% of that initial upfront cost for the ASICs and we can expense it against the income for the year. We're recording this November 3rd, 2025, and there's still time, right? We've got roughly 2 months before the end of the year. And so if you reached out to Colby and you said, hey, I really want to get this, across the finish line prior to year end, if you place it in service by the end of this year, you've got this massive expense, right? That we're going to be able to take all of it this year, but you might not have a whole lot of income because you didn't have that much time to actually mine a whole lot of Bitcoin, which is fine. Again, there's a timing component here. The bonus depreciation is as long as you place it in service, we can take that up, and there are some limits, and that's why I kind of caveat with if you're looking to go much larger, we'd have to consider what the caps are and all this and all that. But I don't want to get too in the weeds because I know tax can get boring. So I want to take like just the example that I'm kind of seeing over and over again, which is kind of that 50 to 100K. I don't know, Colby, is that what you're seeing on your end, or are you guys seeing bigger deals than that?
There's a lot of the 50 to 100 to 150, but there's also the larger deployments where people want to put seven figures. Then there's also a lot of small deployments where people want to bring on two rigs. So, can the guy who's bringing on two rigs benefit? And where is the line drawn in terms of being a hobbyist miner versus this being a business? Because I've heard
Mm-hmm.
100 hours, if you're actually spending 100 hours in your business, is that where the line's drawn?
Yeah, and that's a great question, and love that that's where we're going next because that is the very important distinction, especially for someone like a dentist, doctor who's high income, and they need this to offset their active income. In order for us to do that, to your point, we need to make sure that this is counted as an actively participated in business. There's a bit of gray area. The 100 hours that you referenced, that is a good mark. And so, one thing that we talk with our clients about is making sure we set up processes to not only track all of their Bitcoin incoming, their cost basis, anything that's going out the door, any sales to track the taxable gains, that we're also helping them to come up with ways to track their hours and make sure that we have clear time logs. The IRS is in a bit of shambles right now with the cuts, and very few are working with the government shutdown. So we're in a very favorable environment with the administration, and all of that is, I'm cheering for that. I think that's incredible. But things change, right? And there is the statute of limitations that goes back, the 3 or 7 years, depending on couple different factors. And so we're wanting to make sure our clients are set up where they take this loss, they if assuming that they meet the threshold of the material participation, they take it as an active loss and they take it as an active loss against their active income. And so again, in a world where you deploy $100,000 this year, but maybe you only have a couple of $1,000s worth of income, you take that large loss and you apply it against your, seven or $800,000 doctor salary, for example.
Sounds like a powerful tool.
100%. It's very powerful. And I mean, at the end of the day, you also are getting Bitcoin, which is just an incredible asset to have on your personal or business balance sheet. And so, yeah, we're just trying to make it as easy as possible, right? So if you come to Colby and you're like, hey, I want to get into Bitcoin mining, but I don't know how to do all of it, they take that off your plate and of course, charge a small hosted mining fee. Our model is very similar, right? Where it's like, we're going to take this off your plate to track the depreciation and to file all the forms in the correct states and with the federal government. And at the end of the day, you get Bitcoin at a cost of production, assuming the cost of your power is at a correct level or lower, you're capturing this arbitrage where you're getting Bitcoin for cheaper than the market rate. So I don't know if you want to go too far into that, but yeah, I'll pause there.
Good point. And efficient mining, to give people an idea of what that can look like, Bitcoin took a dippy dip and it's trading for about $108,000. But if you're running some of the most efficient equipment like an S21 XP at a standard hosting rate, your cost of production, even factoring for a little bit of downtime, is currently about $70,000. Of course, that's always subject to change according to Bitcoin mining economics, but that's gives a little bit of an idea of what efficient mining can look like. Spot Bitcoin's trading for about 108. and you can efficiently mine it through hardware that you own, potentially take advantage of tax benefits, and mine it efficiently where you're getting more Bitcoin than your operational expenses for that machine. Of course, that's always variable and volatile and subject to change, but that could also get better. In other words, Bitcoin price can outpace difficulty like it has done in previous bull markets, and that benefits the Bitcoin miners that are online and hashing efficiently. And
Yeah.
so we can get you online in hours where you actually own the hardware and you call somebody like Jordan and have a conversation about how you treat the hardware ownership from a tax perspective and take advantage of things like depreciation. So, Jordan, how much can someone actually save if they are, let's say, earning a lot of money in a W 2? How much can somebody save? Because I heard that there is a limitation in terms of business losses. Is it accurate that there's a $313,000 limitation for single and 626,000 if married filing jointly?
Yeah, generally those caps and then anything that is in excess can be carried forward.
Mm,
So that is something to definitely watch out for. I mean, what we're doing with a lot of folks right now is we're doing a lot of tax estimates where we are taking their prior year return, depending on whether they're already deployed into mining or they're looking into it, and giving them an accurate, based on these assumptions, this is what your results would be on your tax form if you deployed X amount. Or, and we can run a couple of different scenarios, right? If they wanted to do like a medium or go all in kind of thing. So that's probably where I would push people if you are interested in, like, hey, I've got a bit of a complex tax situation just generally, but then I also want to add in this mining component. Let's plug all your stuff in and see what caps we run into and what is the net benefit that you're going to be able to realize for 2025, 2026.
is it safe to
So,
say that it can make a big difference?
oh, it can make a huge difference. I mean, even take someone who puts $100,000 into Bitcoin mining and they can take, call it roughly $100,000 loss if they do it towards the end of this year. And say they're in the top tax bracket at 37%, can see a
Federally.
world, yeah, where they literally are saving $37,000 in taxes because their taxable income got lowered by 100K. Now, it is very important to go state by state. Some states exclude the bonus depreciation or they add it back to your income. So it's not always where you should explicitly bank on, hey, my state tax is 5%, so I can tack that on top of my top tax rate. It's state by state. So again, that's why the planning is so important, just to make sure that you're going into the situation eyes wide open. One thing that I know I did not mention when you were asking about the hobby and we talked about the hours, the other big thing is to create an entity strictly so that you can say, look, there's separation between this business activity and my personal activity. So spinning up an LLC, most of the clients we work with are just having those taxed as sole proprietorships or disregarded entities. Those are interchangeable terms, reported on Schedule C on their personal return, and then all of the net loss or net profit for the future years all just flows. And then we have the flexibility because if you do have an active business there and you do show net profits potentially in years 2, 3, and beyond, we do have some flexibility there to potentially spin it up as an S corporation if that makes sense. They get a loss this year in 25. Then for next year, we're going to get to third or fourth quarter and they're going to decide, hey, what am I showing in profit on the Bitcoin mining activity? Do I want to potentially buy more machines before the year end to then create another loss?
Bullish.
And then there are some distinctions on like hobby versus business for activities that take a loss, more than 3 out of the last 5 years. So you also have to be careful on that. And it's a big, it's a timing thing, right? Should we just take bigger losses in years 1 and 2 and then prepare to have some profit in years 3 through 5, for example.
Mhm. Is it accurate that the hardware needs to be placed into service after January 19th?
For 2025?
Correct. I think the date's January 19th, if I'm not mistaken.
Okay, yeah, that sounds right. I just always heard it goes retroactive to January of 25. But yeah, let's do that. That sounds good.
Good to know. And I can guarantee you that the Bitcoin miners are going to put more Bitcoin in your wallet than a truck that weighs over 8,000 pounds.
Yeah, yeah, 100%.
So, Jordan, this is good stuff, man. Definitely some digital gold nuggets in here. Best place to reach you. I know we've connected on Twitter, which is what Guess, Guess _ Jordan. I know you're active on LinkedIn, Jordan Guess CPA. Definitely check out bitmint.co. And any final thoughts? Really appreciate you joining me again and discussing the potential benefits of owning Bitcoin mining hardware as it applies to people's taxes.
Yeah, no, there's nothing else on my end. I think a lot of this is case by case. So we love to jump on and give high overview of all the different factors, but then the real fun starts when we get a copy of the last year's return, and then we plug in some new assumptions and start to do the tax planning process with someone. And so, yeah, I'd be happy to, we probably only realistically have about a month to actually do that between all the holidays. And so the call to action would just be work with a CPA that knows what they're talking about with Bitcoin mining and probably act pretty quickly to do a tax estimate because worst scenario is you get to next year and you're like, hey, I thought I was going to be able to do this and this was going to affect my taxes favorably in this way, but it turns out it wasn't structured correctly or whatever the reason is. And then we don't get to take the deduction we thought. So it's always better to pay some money up front and get that plan in order and then go from there.
Um, awesome. Well, also, people should join the Proof of Workshop over at School, SKOOL, Proof of Workshop, where we talk about Bitcoin through the viewpoint of Bitcoin miners. And there's a lot of interesting information over there as well. Powerful stuff when you're talking about how it can affect your taxes, your income, and how you can stack more Bitcoin efficiently, both from a tax efficiency perspective, but also Bitcoin mining itself has a lot of value besides the tax benefits. So definitely get connected at the Proof of Workshop and look Jordan up on X or LinkedIn. Appreciate your time, Jordan. Happy hashing and stay bullish.